Good afternoon, everyone. It is so good to have you here with us to talk a little bit more about home buying today. We are excited to get started and want to make sure that we honor your all's time, so we're going to jump right in. For today's webinar, we've gone ahead and muted everybody on the call except for our presenters for today. This way, you can eat lunch, you can wrangle kids in the background if necessary, and you'll be able to hear our presenters. But we don't want this to stop you from asking questions. So if you could put in the chat feature, this is either going to be on the right-hand side of your screen or at the top navigation, depending on what device you use to log in. But if you could put in the questions feature, when you are planning on buying a home, are you planning on buying a home this year, maybe next year, within the next 5 years? And if you don't know the timeline, it's totally okay to say sometime. That's about my timeline, I think. If you could put that into the chat or the questions box for me, great. I've already seen a few people. Thank you so much for interacting with us in this way. Got a lot of people saying about 1 to 2 years, maybe 1 to 2 years. Great. Awesome. 1 to 3 years. Wonderful. I love that everyone's getting a head start. You are in exactly the right place to be able to do this. So we are glad that you're here. This is the place you will ask questions throughout our presentation. If a question comes to mind, please don't hesitate to put it here. We do have somebody monitoring our questions feature throughout our presentation, and we may ask the question during the webinar, or it may be right after when we finish the content on the slides. So stick around for the question and answer period as well. But this way you can ask us questions throughout whenever they do come to your mind. This presentation is being recorded and will be posted on our YouTube channel so that you can rewatch if there's anything that you miss or anything that you want to go back and learn a little bit more about. We will also be sending this via email to you either tomorrow or Friday so that you have this information on hand and you're able to get to it quickly. We do ask that you take a survey for us once the presentation is over. This is a very simple, about I think 4 or 5 question survey. This just helps us to make sure that we are providing you the content that you'd like and we can continue improving this content in the future. We are Harvard University's not-for-profit financial institution. Harvard University Employees Credit Union is serving specifically all those in the Harvard community. We are able to be a little bit more direct with all of our products and services because we serve this exclusive group. We believe that we have everything that a bank does, but we think we do it just a little bit better. If there are any products or services that you have questions about, we are happy to answer those. Today we'll obviously be focusing on home buying and that process with one of our mortgage loan originators. But I highly recommend if there are other questions about the credit union that you do have, we are happy to answer those as well. I'm going to go ahead and introduce for you today our presenter, and that is Sharon Cummings. Sharon is one of our mortgage loan originators at the credit union, and she works in the Harvard Square branch. So if you are around, she is there throughout the week and would love to help you. That is her contact information, but you can find this contact information on our website and you'll be getting the presentation as well, so you'll have this on hand. But I'm going to go ahead and pass it off to Sharon. Sharon, if you just want to get us started.
Thank you so much, Sarah. Thank you, everybody, for joining today. And I'm thrilled to help you and go over the home buying process. Please request any questions you may have. Please feel free to reach out. I'm more than happy to help and do my best to answer any questions that you have. So today we're going to start about talking about a little bit about a team. When you start the mortgage process, there's you want to think about who you want on your team, who's going to help you, who's going to through the process, through the real estate process, through the legal process. But the benefits of having the Harvard Credit Union on your team is one thing we take pride in is our personal service. we do our best to try to work one-on-one with our members through this process, whether it's the very beginning from, pre-qualification to the very end of closing on a loan, and then hopefully down the road, any refinances or any other products you're looking to do. So I think we specialize in personalized service. We do offer a wide range of mortgage products for most borrowers. Usually we have a first-time homebuyer program. We have jumbo products. We have many different types of products that we offer, and I feel that we're very competitive in the mortgage industry. Our rates are posted daily. We have first-time homebuyer rates. We give a discount for our first-time homebuyers. We have closing cost credits that come along with being a first-time homebuyer, and we give once again, the personalized service. I think that you work with one person from the very beginning till the end, so you have a contact at all times at the credit union. We do offer many different programs, including 3% down programs, and most of our mortgage process from beginning to end is mostly all digital, which is nice. You don't have to really come into the branch. You don't have to make copies. Everything can be done digitally online, whether it's applying, uploading documents, and just the whole servicing aspect of your loan. We offer in-house loan servicing, which is, I think, one of the really good features of the credit union as well. It's once your loan closes at the credit union, your loan will be serviced by one of the representatives at the credit union. So anytime you have a question, you want to have additional money paid to the principal, or you want to have a question on your taxes, there's always someone in the credit union that can access your information and respond pretty quickly. So I think the in-house servicing is a nice feature that we offer our members. We do have portfolio lending, and what that is sometimes things come up and they're a little bit unique and they don't meet like secondary guidelines. We do follow Fannie Mae guidelines, but we have the option to portfolio loans. And that means we're able to make a little bit of a different decision on a loan. If it's not quite Fannie Mae saleable, we might be able to make the loan work on your behalf if there's a lot of good compensating factors. So we do have that portfolio lending capability. And we have a relationship credit. That's for most members who are not first-time home buyers, because they're getting the discount on the first-time home buyer section, but they are members who have other accounts with us. So you can get a relationship credit towards like your closing cost. So it's something to definitely look into, and it's a nice benefit for our members when they're refinancing their loan. So a lot of people come in and the first question, this market's a little bit unique compared to, the last several years. Market conditions, what I hear from just talking to other realtors, my members that I've been working with, the market conditions they're a little tough right now. I think there's a lot of interest in properties, and maybe not as many as properties available. So I always say it's always good just to keep your eye out, because when the right one comes up, you want to act on it. So market conditions right now, I would say, would be rates are low. Rates are still very low. They have, they were a little bit lower maybe 3 to 5 months ago, but they're still extremely low. The housing inventory is probably not as big as we'd like it to be, but there are still houses on there that are on the market that are for sale, and we do have a lot of our members that are this year getting accepted offers, which is fantastic. So usually when we meet the first time, we say, where do we start? Whether you're starting today and you have no intentions of buying a home for the next 5 years, or you're thinking of buying a home in the first 6 months to next year, or in 3 months, where do I start? The best place to start is doing a pre-qualification or a pre-approval. The difference between the pre-qualification and the pre-approval is the pre-qualification is almost a conversation. We would sit down, we would review all your assets, we would review your income, find out what level you feel comfortable with the purchase price, down payments, and kind of go through the process just to get a gauge of where you see yourself, what you feel comfortable with, what type of monthly payment are you looking for. And at that point, that's the pre-qualification. The same time, or it can be done, we can do the pre-qualification multiple times. The pre-approval, the only difference between the pre-qualification and the pre-approval would be we actually access your credit. We pull your credit, and we also verify income. So this all can be done at one time, or I always say to my members, if you want to come in and do a pre-approval or schedule a call, we can do a pre-qualification. We can do it 5 times and kind of have you comfortable before you go to the next step of being pre-approved. In most cases, when you start actually working with a realtor, they're going to want you to be pre-approved. So that's something that we would work with you, get a pre-approval. It's a quick process, verify a few income, assets, and credit, and then we would issue pre-approval certificates. And this would be something that would be good for 90 days. So that's something that, we can do the same day, or we can have multiple conversations and do it when you're ready. There's no rush, because the mortgage process is such a big process. We want to make sure you feel absolutely comfortable before going to that next step of being pre-approved. One, when you're thinking of buying a home, there's some things you want to kind of keep in mind and think about what you're looking for. Do you have a certain location? Some of my borrowers come in and they know exactly where they want to live. They know the city or town they want to live in, and they know the property type. They know if they want to buy a condo or they want to buy a single family home. Those are important for when you're actually going to start looking at different properties and when you are starting to work with the realtor. The realtor will probably reach out and you want to give them an idea of what you're looking for. If you're looking to live close to the city, that's the area you want to have a realtor that's very focused in on, say, if you want to live in Boston, the Boston area. Property type, a lot of our members, either it's a single family home or a condo. Either one we can do a pre-approval for, and it's a pretty easy transition from single family to condo, because sometimes you think you want a single family, but when you see a townhouse that you absolutely love and it meets all your needs, you might want to go with the condo option or townhouse option. We do multifamilies. Multifamilies are a little bit different when qualifying. There's a little bit more involved when you're buying a 2-family or a 3-family home. That I would suggest, when you're talking with your mortgage loan originator, talk about the options and what's required, because there is a little bit more, there's a larger down payment, and there's also larger funds you need to have available after closing for reserves. One other feature you want to talk to your realtor when you're looking is what you like. Do you want to have a house with a garage? Is that important to you? Would you want to have 2 bathrooms or 1.5 bathrooms? The things that you must have and the things that you want, I would make a list. And then the realtor will do a good job looking at those properties and kind of saying, yeah, this house might meet your needs. This has 3 or 4 of the needs that you're looking for. It might not have the pool, but it does have a garage, fenced-in yard, and 2 baths. So it might be a perfect opportunity. So identifying the properties that you're interested in is a great idea when you're ready to go start looking at different homes, because there's a lot of you going out every weekend looking at homes. So you want to look at homes that are going to really meet your needs.
Sharon, we had a question that came in with one of the previous slides regarding the products, the different mortgage products. Would you mind doing a recap of what they were?
The mortgage products?
Yes.
Yes, absolutely. So we offer, as mortgage products, we offer the first-time home buyer mortgage product, fixed rate loans, conforming fixed rate loans. We offer jumbo mortgages, and the difference between a conforming and a jumbo mortgage is the size of the loan. So we offer jumbo mortgages, which is any loan amount over a certain dollar amount becomes a jumbo loan. And that also could impact the credit, the interest rate you're receiving, and possible funds you need to close. So we do have jumbo mortgages. We have first-time home buyer. We have 3% down programs. We have adjustable rate mortgages, which are pretty, right now, a lot of people are liking adjustable rates. The rates are pretty low right now, and it's a great conversation to have with one of your originators when you're looking at different products, like which makes most sense to you. I always say if you know you're going to be in the property for an extended period of time and rates are great, I think the fixed rate product is the best product. But a lot of our members may say, you know what, we plan on being in this property, but I don't see myself in this area for more than 5 to 10 years. We should talk about an adjustable rate, because there's some really good benefits around adjustable rate products.
Thank you. Another question that came in, would you recommend only seeking a pre-approval once we found the home we wanted, or try to estimate the 90-day period that we'd be trying to buy?
I usually say when you're ready to start looking and working with a realtor, that's the time you definitely want to get approved for a pre-approval. Most when we do the pre-qualification, most of our borrowers have a good idea of their income, their credit score, and we can give you a general idea. But once you start working with a realtor, the way the market is today, that houses are going on the market and they're sold before even the open house happens. So I would say if you're ready to move on a property, a pre-approval is probably one of the first things you want to do, is get yourself pre-approved. And that way, going into the transaction, if you see the perfect house, you have the ability to go in, make an offer at that time versus doing it after the fact, and you could potentially lose the home. So I'd say pre-approval is a good piece when you're ready to start actively possibly putting an offer in on the home.
Thank you. A couple of other questions that came in. Could you speak to the logistics around taking out a loan that's larger than the value of the house in order to have funds left over for home improvements?
Yep. So that's more of probably a construction loan. We don't at the credit union offer construction loans. What in different scenarios, what members have done, if they have funds to put down, they may reduce their down payment a little bit and keep some of their own funds for things that will happen after you close on the home. If you want to replace, maybe replace the roof or, update the bathroom. It just depends on how much you're putting down and how much available cash you have. But for a loan to take a loan that's actually more than the house is not something we offer. But there are lenders that do offer that, and it's a construction loan that you could certainly reach around, and we could also be a resource maybe to recommend some places if that's something you're looking to do.
Thank you. I have a couple more questions that I'll take now, and everyone, please feel free to continue to submit them. I'll ask these questions, and then I'll have you, Sharon, continue, and then we'll do another Q&A break. But I'll ask you two other questions that came in that are tied to the content that we're reviewing now. Does a person with fair credit have a chance as a first-time home loaner? Sorry. Does a person with fair credit have a chance at a first-time home loan? There we go.
Absolutely. So we're here to help everybody as best as we can. We're going to work with you to try to find the best spot for you. If you have any types of credit concerns, I would say you may want to come in and talk to one of the originators, and we can kind of set a plan. So that way we could say, okay, within the next 6 months, we'll get you to that point where your credit score is going to be good enough to apply for loan. We have mortgages. We've done mortgages for, credit score of 620 and above is Fannie Mae guidelines. The only downside, the downside, one of the biggest downsides, I should say, is when you buy a home and you put less than 20% down, the premium for it's private mortgage insurance that you have to purchase, it's based off your credit score. So the higher your credit score, the cheaper the premium is going to be for you. So I definitely think if you're not quite sure of your credit score, you want to kind of review, some people say, oh, my credit score is okay. It's it's 730. 730 is a great score. It's going to be a great premium. It's just because it's not 820, it's still a great score. So I would say take the time, schedule a call, meet with one of us, and we'd be happy to go over it, kind of look at your credit, see where you fall within payment-wise. And but as far as buying a home with a credit score, we require at least 620, and we not any delinquent accounts. But if that was the case, we could certainly work with you to get you to the next point to be able to buy that house. So I would say I wouldn't be discouraged. I would say we could definitely work together if there was any things that we could do to help. And we also have services at the credit union that can help improve your credit through different other Green Path. Is that what we use?
Yes,
I apologize. I'm having a brain freeze. Yeah. So Green Path's a place they can, you can reach out to them and they can give you good pointers on what you could do to maybe help your credit score go up a little bit, and as well as with us. So that you definitely have a team that way as well, just to get yourself in the right track if you have any questions or doubts.
Thank you. So we did have a good amount of other questions that came in, but I think just to keep on pace with everything that we have to cover, I'll turn it back to you, Sharon, and maybe take a moment, maybe in like the next 10, 15 minutes and ask the additional questions. But please do continue to submit the questions. We will answer them later on. Thank you.
Thank you so much. So now that we've gone through the process, the original process, we got pre-approved, you're out, you're working with a lender, and now you found a home. So people say, what do I do next? The next step is, this is when the mortgage process starts. You have your team. You've probably already when you're at the point that you found a home, you probably already have a lender because you've been pre-approved. One thing I'll say is, if you've been pre-approved with one lender, it doesn't necessarily mean you have to work with that particular lender. It's a whole nother process. So the pre-approval with the lender that you're working with, you want to continue, you have a good relationship, you'd work with that lender. But if you decide you want to go to a different lender, you can do that at this time. Your buyer's agent, very, very important piece of the team. They're going to really help you with the process and make sure that things go smoothly. They're going to be a good advocate for you. They're going to also make sure that when you do put your offer in, that you're putting in a good offer, an offer that's not over asking price or under asking price, something that's reasonable in that particular area. And an attorney, the attorney is another key piece. So the three-year team should all work together and choose them wisely. Your attorney that you're going to work with is an attorney that does real estate transactions. Sometimes I'll have a member say, oh, I know an attorney, they don't do real estate transactions. You really want an attorney who does do real estate transactions, because they're the ones that are going to be able to help you the best and make sure that you are completely covered throughout the transaction, and they're going to look out for your best interest. You want someone that is, I always say, if you don't have an attorney at that time and you want to reach out to several, we have attorneys that we can recommend. Sometimes your realtor will have an attorney they recommend, or sometimes just somebody went through the process and they know an attorney or they know a buyer's agent that they loved and they want to work with. So it's always word of mouth is another great way to assemble your team, I think, just from other experiences. And as I said, we can help along the way with these items as well, if needed. Just back to the buyer's agent, I think that's one of the key pieces as well, is you definitely want to find a buyer's agent that knows the area you're looking in to buy a home. If you're looking in, let's say you're looking in Cambridge or you're looking in Somerville, you want an agent that knows other realtors, they know the market, they know houses coming on the market, and they're going to be able to help you get that home. Some members will say, you know what, we're okay with like several different towns. We just want to be on this area of the west of wherever, so they have a wide range of where they want to be. But always just you want to just make sure that the realtor you're using knows the area that you're looking to buy your home, because a lot of times agents talk to each other and they know houses are coming on the market. So they'll know ahead of the time before this house is even listed that this house is coming on the market. And you know what? It does have that 1.5 bath. It does have the fenced-in yard. It does have a garage. It's going to be perfect for you. So you kind of have a heads up going into it. When you do have, when you're working with your realtor, you go through the process and you submit an offer. When you find a property, you absolutely want to move forward with it. The realtor will present an offer. The offer is going to outline several important pieces, which one is your mortgage contingency. That's an important piece because that's going to help you if there's something changed during the transaction, or if something didn't work out and you were not able to get the mortgage, you're not at risk of losing money. So your contingency is that you're going to buy this home assuming that you're getting a loan for X amount of dollars, and you get to the point that you're clear to close and ready to close on the transaction. Home inspection, we've been hearing a lot of members in this market waiving these contingencies, including mortgage contingencies, including inspection contingencies. A home inspection is a very important piece. What I have been hearing a little bit is people who find a home that they really, really like, they do bring an inspector with them before they even put their offer in, so they can get an idea of what could be wrong with the house, if it's something they want to move forward with. So you can waive your inspection because you've done it ahead of time. It could be a little costly. I have to say, if you do that to several houses, you're paying for inspections that you don't necessarily move forward on. But if it's something that you really have you strongly like, and it meets all your expectations, it's perfect location, it might be an idea to reach out and have an inspector go prior to the day that the offers are due to do a quick inspection on the house. An appraisal and appraisal contingency, that's another important piece. Especially in this market, we hear a lot of members saying that they put an offer in, but the offer went way over asking price. There could be a downside if you purchase a property, you put an offer in, and you put an offer in over, $50,000 over asking price. You want to make sure the house is worth that, because if it's not, the appraisal is going to come back to the credit union or the lender and say the house is worth this, but you've agreed to pay X amount for the house. So you definitely want to make sure that the appraisal contingency is in there. Some people will have an escalation, or say they'll go $20,000 over the appraised value, and it works for them. When you get into a situation like that, I would say meet with one of us, let us kind of run numbers and give you options, because it could mean you're going into the deal with 20% down, but then when we find out the appraisal came in lower, now you're faced at putting 10% down, and we have to get private mortgage insurance. So it can still work out in some cases, but it's definitely a conversation you want to have, and your realtor should also encourage that conversation if you decide to either waive an appraisal or put a line in there that you will not, as long as the appraisal comes in at, $10,000 under asking or $20,000 under asking, it will work for you, and you want to make sure we have a plan B if this does come in. We'll also discuss timelines. Timelines are pretty important. We're seeing a lot of members who put their house on the market and they want to close in 30 days, which it's absolutely doable. We'd work really closely together. We would get the application in right away. We would get all documentation in, and we would work right at the very beginning. So that way we can meet your timelines to make sure that we meet that closing date that you had selected at the time of your offer. When you submit your offer, usually you have about 24 to 48 hours before the seller's agent will come back and let you know if your offer's been accepted. So it's a quick turnaround. It could take up to a day or two, and they'll reach back out to you. And once your offer's been accepted, the next step would be, at this time too, I didn't mention the first piece of it, is you do give $1,000 at the time of your offer. And that $1,000 is only kept if your offer is accepted. So if you give them $1,000, you put your offer in, and your offer was not accepted, they're not going to take that $1,000. That goes back to you. But if they do, that's part of your down payment. So your offer's been accepted. You've put $1,000 down as a down payment, a good faith deposit, and that's part of your down payment. So if you're putting 5% down or 20% down, that $1,000 is going to come off the down payment. Once your offer is accepted, at that time, it's going to be a quick turnaround. You're going to need to get an attorney, probably within the next 5, 7, 10 days. And the attorney is going to do the purchase and sale for you. The purchase and sale is something that is going to outline the whole transaction. They're going to fine-tune all the contingencies, all the dates. If you're going to purchase a home and they're leaving the appliances or they're leaving the washing machine, that will all be outlined in the purchase and sale. It will also outline if for some reason the house isn't ready and you're not able to move into the house for other reasons than your own, what's going to happen? Who's responsible for that if you don't meet the timelines? So there's a lot that the attorney will do, and having a good attorney will make sure that you're covered and you're protected through the process. Okay, so you have your offer accepted, you found your attorney, and now you're going to apply for a mortgage. When shopping for a mortgage, the first thing for the most part, you'll get a loan estimate. And the loan estimate is going to outline all the costs associated with the transaction. And this is going to tell you if there's any fees that are involved, just to make sure you're aware of what will it cost me to buy this home, including my down payment, including my all the costs that are associated, including my real estate taxes, homeowners insurance. So everything's going to be outlined on your loan estimate. The loan estimate is an important tool because that loan estimate has to be pretty close to accurate from the time you submit your application to the time you go to closing. A lot can't change through that process. So your loan estimate's a good starting point to give you a good idea of what you need to make sure you have enough funds to get to closing. You submit your application. At the credit union, when you submit a mortgage application, you submit it once you have an accepted offer. Your rate is locked for 60 days. During that 60 days, whether you close in 25 days or you close in 50 days, your rate's locked at the rate you chose that day when you submitted the application. We'll work with you through all the process to make sure we meet all target dates, so that way we meet the date that you're closing on the loan and you're not going to exceed your rate lock date. We're going to make sure that you close in time to make sure everything's done. We'll work together. If something has to get done, we'll work together to make sure we get it done, well in advance. Once your application is accepted online, you're locked into a rate. That's when the mortgage process starts. You're going to be asked to provide a substantial amount of documentation, but nothing that should be too surprising. Mostly assets, bank statements, retirement accounts, checking, saving, investments, income documentation, your pay stubs, W-2s for the last 2 years. If you're self-employed, be prepared to provide 2 full years of tax returns for self-employed borrowers. It's a little bit more documentation involved on self-employed borrowers that we would need to get. We could need to get a profit and loss statement from your accountant. So it could be a little bit more documentation, but we would work with you and help you get that documentation and give you an outline of what you need to get the loan to the next step to go get approved. The attorney, the lender you choose with the credit union, we would order an appraisal. We order the appraisal right away. So that way we know the appraisal's on it. The appraiser will reach out to the seller's agent, schedule a time, do the appraisal, and hopefully have the appraisal back within 7 to 10 days. Once we have the appraisal, all your documents have been submitted through that secure portal online electronically. Your loan is then submitted for review. And that when it's submitted for review, it's going to an underwriter to have everything all the final documents reviewed and approved. Once your loan's been approved, you'll be issued a commitment letter. And the commitment letter is saying that, yes, Harvard Credit Union is lending you X amount of money for this particular property based on a value of that home at X. So it's a commitment to say, yes, we are moving forward and we are lending you based on everything. The pre-approval, we've based it on your credit and your income. The commitment letter is actually saying that we've based it on everything. We've verified everything from your assets to the property itself. Once your commitment letter is issued, you may have to provide another documentation. Documentation is kind of like the key. You may have to provide an additional pay stub or explanation of an inquiry that came up on your credit report. But at that point, once everything's been satisfied, the underwriting team will issue a clear to close. And that's when the attorney is notified that your file is all set and ready to close. And they'll start the process to get you ready to get to closing. So you can close on your home the day that you plan on closing and buy your home on that day. One thing we say is to try to hold off is during the mortgage process, 2 to 3 days prior to closing, we pull your credit at the time of application. A couple days before closing, we'll also we'll update your credit. We won't do a hard pull, we'll update your credit, and we want to make sure that you have not taken any new debt. If you need a car loan or if something happened to your car during the process, just reach out to your originator, kind of walk it through. Because the last thing we want to do is get to closing and find out that you just purchased a car because you needed one, but now it's the mortgage transaction has to be re-reviewed and hopefully remain approved because there's new debt adding on to your financial profile. Try not to escalate debt. I know some members will say, oh, we want to buy some new furniture. If at all possible, try to hold off until you actually close on the loan, because once you start using other debt right before closing, we're going to have to get verification. It has to be re-reviewed by an underwriter, and it just could cause a delay. So anything you do that prior, speak to your loan originator, and we'll go through, run the numbers, and we'll have If you did have to go out and buy a car, we'll have the car contract and say, okay, your car payment is now $320 a month. We'll bring that to underwriting. No, it's not going to be a problem. The numbers all still work. You're fine with the car loan, and we can move on. So always just make someone aware of it during the transaction, so that way we can address it before closing. Okay, so right before closing, we do two things. We do that update your credit report to make sure there's been no new debt added or no increase of debt. And we also verify employment. So 2 to 3 days prior to closing, we will call your employer and just make sure that you're still employed at the same employer and your job is still the same as when you applied. If during the process there's anything that changes, any job changes, just keep the conversation going with the originator, so that way we can prevent anything becoming a problem at the end. If we know up front, we can work with it, and we can work with you to get it to closing, with the new job. If it's a new job and you just received a new position and it's all going to work out, we can make that still work, but we just need to know ahead of time. 4 to 5 days before closing, around that same time, you're going to receive what's called a closing disclosure. The closing disclosure is going to go over all the final figures, what it cost you to get this loan, what you need to bring to closing, and the remaining funds owned at closing. When I talked about it earlier in the transaction, the presentation, is the loan estimate. So you get the loan estimate at the very beginning to kind of give you an idea of what to expect. And the closing disclosure is what is going to happen. This is what you owe. This is the amount of money you need to bring to closing. And this is what it costs you to get the loan. The closing disclosure and the loan estimate should be pretty similar. There shouldn't be a lot of surprises once you get to closing. If anything changes during the transaction, you'll get a new updated loan estimate. If something changed, if you needed a second appraisal for some reason, we would update things as we go along. So there's no big surprises at closing. The closing disclosure will outline what you need to bring to closing. For purchases, most, if not all, attorneys want the funds wired the day before the closing. So if you're closing on a Tuesday, you'd wire the funds out on Monday. Make sure the law offices have the funds available to them for that closing on Tuesday. And that will all be outlined in that closing disclosure package that you receive at the very end. Usually 24 hours before the closing, you'll get to go through the house and make sure that everything looks like it's in the same, what you expect it to be. If they were leaving the wash machine and dryer, that's still there, it's still in place. You'll walk through the house to make sure there's been no damage done to the house between the time you looked at it at the time of the open house until the time you're going to close. So you'll have a chance to walk through the house and make sure everything is in good order. This kind of just sums up what we went over. A lot of information, and as I said, we're always available to go through this information with you one-on-one, and kind of just go through your scenario and kind of outline things, because it's a lot of information and everyone's different. So there's always something a little unique about everyone's situation. So it's great to meet up with a originator and sit down and kind of talk on the phone and discuss the mortgage process. So usually the process, the roadmap is you get your pre-approval, express pre-approval, which is online. It's an application online at the credit union. It's a pretty straightforward application. It takes you probably about 5 minutes to fill it out. Once that's submitted, one of the originators that would reach back out to you and kind of gather some additional information, kind of talk about the pre-approval, kind of get a feel of how much are you looking to borrow, what do you want your monthly payments to be. You get pre-approved. Pre-approval is good for 90 days, and the pre-approval can be updated along that 90 days as much as you need. People ask what happens after 90 days if I haven't found a property. We'd start over again. We would still use the same process. We would just have to update your credit again and verify income again. The second step is you'd go to put your offer in. Your offer is accepted. The next step is you go to purchase and sale. The purchase and sale, you're going to need an attorney to help you with the purchase and sale. So during that time, you can reach out, find a real estate attorney that will work with you. As I said, we have about 5 or 6 attorneys that we work with in the past that will help you with the transaction if you need assistance with that. Once your property has been accepted, you're buying the house, you submit a loan application, and that's when you lock into the interest rate. You're locked in for 60 days. During that time, you'll receive your loan estimate, and a closing disclosure will be issued, kind of outlining what the costs are, what's associated with the transaction, and what you need to be prepared for. What's your monthly payment going to be? This will all be outlined in the loan estimate and your closing disclosure. And then you provide all documentation that's needed through a secure portal. We reach out to you with a welcome letter and we say, okay, based on your situation, we need these 10 items, and you'll have a way to go in to upload all of these items into a secure portal and go from there. Once your application is processed, everything's verified, your commitment's issued. That means the credit union's lending you the money, the home's worth, the value of the home is worth what you're paying for it, and then we issue a clear to close to the attorney. So that means, okay, we're ready to go to closing. So this transaction is ready to go and have all the paperwork signed off on and close on this file. Close meaning purchase the home. So the closing is when you purchase the home. We verify your credit, employment. We want to make sure you're still employed. And then you get that closing disclosure, the important disclosure that's going to tell you what you need to have available at closing to make sure that the funds are there for the transaction the very next day. In most of the cases, it's done by a wire. When credit union offers a wide range of products. We offer not just mortgages. We're a full financial institution. We offer all your checking accounts. We offer auto loans. We offer home equity loans. We're a full financial institution, and I think with great service. So if you're not a member, you might want to think about going online and seeing what we have to offer, because there may be a product out there that you may need at this time, and it may work out great for you. And then this is the 5 of us. We all work together pretty closely. We all have different locations. We all have different homes. There's a couple that are at the Mass General Hospital location, a couple at the Harvard Square location, and also we have the medical area location. So there's 5 originators that are available. And at any time you can reach out to any one of us and we can help you, whether it's mortgage questions, pre-approval, pre-qualification, whatever you need, we're here to help as a resource. So we're here as a resource to help you during the home buying process, or just to get your information regarding buying a home.
Thank you so much, Sharon, for everything that you've explained to folks. We have about 15 questions and 15 minutes left, so have some water while I tell folks about our survey, and then we'll do a lightning round of a couple of these questions. I dropped in the chat the survey. Please complete the survey. It really helps us continue to bring this education to all in our community. It's very quick to do, so please take a moment to do that. And it is in the chat, but I also will email it to you later today. As a reminder, everything that we presented today, it's general information. That being said, we, as Sharon said, meet with a specific mortgage loan originator with specific lawyers. Our information is really meant to be educational and give you the tools to get started, but always speak to a professional. Our contact information is here so that you can see it, but I'll turn it over now. We'll get into our Q&A. If we're not able to get to your questions today, keep in mind you do have in the chat our mortgage loan originators contact information. You'll also get resources, but I will try our best to go through these. The first question that I have, do you need to work with a realtor to purchase a home?
Not necessarily. Some borrowers do purchase home without the realtor involved. Sometimes you hear the good and the bad about it. Sometimes it's nice to have someone that's helping through the whole process. If there's a realtor on the seller side, it may be beneficial to have a realtor on the buyer side. And the reason I say that is because the money that it's going to cost to purchase the realtors are going to receive compensation from the sale. So whether it's the seller's realtor or the buyer's realtor, they'll either split the commission, or if there's no buyer's realtor, the seller's realtor will get the commission. So sometimes it can work in your favor. If it's a house listed, no realtor involved, you might be able to get a little bit cheaper because of the commission. But I think it's always important. A realtor does do a lot of work throughout the process, and they do help the process, keep the process moving, and they can help you with a lot of questions that you have that we may not we may not know the answer when we're out looking at a home. So yes, you can. Definitely people do it and it works out great. But I would always say if you see a home and there's a seller's realtor, there's really, I would encourage having a buyer's realtor as well.
Thank you. I had a couple questions about down payments. I'll group them together. How much do you need to save realistically for a down payment in Massachusetts to buy a moderate home? And then when is a down payment due? Is it due at closing and before?
So we do loans, and it's the 3% down program is based on different counties. So it goes by the loan, the amount you're borrowing. So depending on the size of the loan, you can put 3% down. When you're over a loan amount, and I have to double check this, but it's maybe 547 or something to that. That might not be the exact number, but anything over a certain loan amount requires 5% down, up to $1 million. So minimum 3% down to buy a home. Here at the credit union, there might be other places that offer, 100% financing or different options, different grants. But here at the credit union, the minimum 3% down. You do have to keep. You'll also have to be aware of your down payment's one item, but then you have your closing cost and then the other costs that all add up. So I always say your closing costs, based on a home, let's say the home purchase price was $400,000, you're putting 3% down, it's putting $12,000 down. You probably want to, your closing costs may run anywhere from say $3,000 to $3,500. But then those other costs you want to be aware of, which are your real estate taxes, your homeowner's insurance. So I usually say double that. So if your closing costs are $3,000, be prepared to have about $6,000 at closing for everything, including you're going to need an attorney who will help you with the purchase and sale. Your real estate taxes, you'll pay 1 year of homeowner's insurance up front. So there's other things that get factored in. And what I like to do is when I'm sitting with a member, whether we're doing a pre-qualification, pre-approval, is give them an outline of final figures, like what to be prepared for. So not just closing costs, not just your down payment, but those other costs that are there. Home inspection, that could be anywhere from, $500 to $600. So that's another cost that you're going to have to pay. So I like to give you an idea of the full picture, not just specifically the down payment. So there's down payment, closing costs, and then all those other things that add up to be prepared for.
Thank you. We have a couple of questions regarding credit scores and interest rates. What is the ideal credit range to aim for before starting a pre-qualifying or pre-approval process? Will your credit be impacted if you have to do a pre-approval again after the 90 days passed? And can you shop around for different mortgage lenders to get the best interest rate?
That's great questions. So credit scores, as I said, the credit scores, each lender is very different. So it just depends on the lender you're working with and what they, how they price their loans as far as credit scores. We usually say anything over 720 is going to give you a good, reasonable private mortgage insurance premium. If you don't know your score, I would say there's going to be a part in the presentation that will give you where you can go get a copy of your free credit report. It's always a great idea because you want to make sure that your score, if there's something out there that can help your score go up, pretty quickly before you start the mortgage process, it's definitely worth doing. But 720 is usually where a good start. But that doesn't mean we've done loans at 630, 640. We do our best to make it work for everybody. And the second question, the credit score, and then what was it? I'm sorry, Natalia, what was the second
The credit
piece of that?
Is there any impact on credit if you have to do the pre-approval again?
Yeah, it is a hard inquiry on your credit report. I haven't seen it a hard hit. I haven't seen it impact a borrower substantially. It might change your score a little bit, but for the most part, it is another hard hit on your credit report. So it will show up as a credit pull, a hard pull on your credit. But as I said, it just depends on what else was being done at that time of the time the credit report was being pulled. But if it's every 90 days you pull your credit, I've never seen it go substantially change someone's credit score, by 20, 30, 40 points. It's hard to say because if there was something else that drove your credit report score down that month, it could be, that month you could have a high revolving balance on your credit card, and then you do another inquiry. That could all impact your credit score. But it's something that you have to do. So it's Definitely something that it could, but I've never seen it do it substantially lower your score that much.
Thank you. And there was a question about shopping around to get the best interest rate. If you're going to do that within a 2-week period. That way
Yes,
it can count as one hard pull instead of having it count as multiple.
exactly. Yeah, I agree with that. That's a good point.
Okay, we have about 5 or so questions left. The next one, can I find a realtor through HUECU?
I mean, we have realtors that we've worked with in the past that we have relationships with. Um, Usually, if a member asks me, I'll think of members that I've worked with in the past that I think had a really good experience in someone that knows that area really well. But it's definitely something we can help you with that as a reference. I wouldn't say we would refer you to a realtor, but we definitely can give you several and I would say reach out to several. You want to make sure that the fit is right. So if you meet 1 or 2 realtors, go to a couple open houses. You don't have to sign with anybody. Just make sure you get a realtor that you feel really comfortable with, that's going to respond to you when you need to be responded to, and someone that knows that area well, because that's the key piece. But we can certainly share realtors that we've worked with in the past and we've had good experiences with.
Thank you. Sometimes banks sell off the mortgage to a third-party institution. Is this true for HUECU?
The credit union can sell the actual mortgage transaction itself. It can be sold to, we underwrite our loans to Fannie Mae, but our servicing is always done in-house. So the impact to you is the loan might be sold at one point, but your loan is on the books at the credit union. So your tax bills, everything's coming from the credit union versus going to a different lender, getting your tax forms from a different lender. It's always going to be kept at the credit union. So the servicing piece is in-house.
Thank you. Do I need to join the credit union to use these services?
You don't have to be a member at the time of pre-qualification or pre-approval, but once you do decide you want to work with the credit union and apply for a mortgage, you would want to become a member of the credit union, and that can be done online. We have a link online. There's a wide range of products. You can look for savings, checking, but we do ask that you have a minimum savings account with the credit union if you're going to go forward with a mortgage with the credit union. But it doesn't have to be until you decide you are going to go work with the credit union at the time you have an accepted offer.
Thank you. Do you work with people buying a foreclosure?
That's a little bit different. I haven't done a lot. We don't really specialize in that just because there's so many legal ramifications with foreclosures. It's a much longer process. And sometimes the foreclosure if it's a foreclosure that you need to put your offer in before you can see the property, it could be a problem with the credit union because we do need to do an appraisal on the property. We've done short sales or, bank-owned properties, but not so much a foreclosure that's being auctioned. I have not done any of those.
If I purchase a home, what is the best way to go about terminating my current lease if the sale closes while I have several months left on my rental lease?
That I would probably talk to your realtor, either your the company that's holding the lease, and see what the options are. If it's, there's a fee involved, or I wouldn't be the best person to answer that, but I know if, there's a lot of times it's outlined that if you terminate your lease, 2 months early, there may be a cost or a fee involved. I would just reach out to your management company or whoever is the landlord and see what they can offer you. Sometimes you can also structure the mortgage so you're closing a little bit later. So let's say, you found a home, you signed your purchase and sale in June and you're going to close in July. Maybe you could not close until the beginning of August to get closer to the end of your lease period so you're not paying fees that you don't have to pay. So sometimes you can work around the timelines of buying the home and then closing on the home.
If the pre-approval expires after 90 days, are all the fees, such as realtor, attorney fees, due all over again?
So if there may be new different fees at that time. There's no fees to do the pre-approval. There's no fees to do the upfront work. But by the time you do submit it's when you submit the mortgage application is when the fees are determined. So the fees, we can give you an idea of what your fees would be at the time of pre-approval, but you don't get your true fees until you actually have a property, an attorney, and all the details of the transaction. So they definitely could change. I haven't seen them change by a great amount. If they've changed very minimal and, not too often. But if the appraiser decides, they're charging $450 now, they could, start in, 3 months from now, they might start charging, $500, and that fee would, be passed on to the borrower because that's a fee of a third party. So we try to keep our fees. We try to keep them as competitive and as low as possible.
Thank you. Would you recommend going to an open house for the purpose of meeting local realtors?
Absolutely, yeah, absolutely. I think that's just go to the open house, look for, sometimes you walk in and you just have a nice connection with somebody, and they're able to help you with the transaction. As I always say, when you meet the realtors, just go to an open house, go to several open houses with them, get the feel. Some realtors will make you sign an agreement that you're going to use just them for the transaction. But before you do that, just express that you want to go to a couple open houses, get a feel for their, that you're going to work with together as well. So yes, I would say it doesn't hurt to go to open houses and meet people at all. I think it's a great tool.
Thank you. And thank you so much, Sharon. You have been a champion answering all these questions. Thank you everyone for joining and submitting all of your questions. If there are any additional questions, please take this moment to submit them. Sharon, anything else that you would like to tell folks as we close today's presentation?
No, just thank you so much for joining. And as I said, there's a lot of information for 1 hour. And as I highly welcome you to reach out to any one of us at the credit union, and we're here as a resource to kind of go through the process with you and give you some of our thoughts and answer any questions. And as I said, everything's done in-house, so if something comes up a little unique, we can probably get you an answer pretty quickly, on a certain scenario or something to that effect.
Thank you so much, Sharon, and thank you so much, everyone, for joining us this afternoon. We will email you the presentation, the recording, resources, contact information, all by the end of this week. So you most likely will have that in the next 24 to 48 hours. We hope everyone has a wonderful afternoon, and thank you so much again for joining us.